Hi, my name is David Kamite. I'm the CEO of Embrace Partners, an MBE firm that is licensed as an insurance intermediary in all 50 states. Today we wanted to have a conversation to introduce to the various stakeholders, that being prospective clients or insureds, MWBE directors, as well as insurance brokers. One of the benefits of our value proposition that differs from anything else that's in the marketplace is, as an intermediary, whatever premiums, insurance premiums, that Embrace places in both the domestic as well as the London, Bermuda, or any other international markets, whatever premiums that we place, the insured can utilize towards MBE or MWBE goals. This is an innovative approach that helps many of the constituents that we talk to. And those constituents are the insured, who are required to meet goals in various states and cities. They are the brokers that are doing transactions on behalf of the insured, and also the insurance companies. So we believe in social responsibility. We believe in, for the good of doing business, that there are various reasons why people utilize or insureds utilize us, not just as a requirement, but because they want to do business with a firm like Embrace Partners. Again, we are a certified minority firm, certified in the state of New York and most of the states throughout the country. We're certified as a minority business enterprise. So today, with that as a background, we wanted to have a conversation. I'm going to introduce my colleagues here, so we can help you understand the value proposition, how this came about, this innovative approach, and how it benefits the various constituents here. So before we go further, I want to introduce the panel. Michael Clay, who is our Chief Procurement Officer, and then David Melick, who is our construction practice leader. They're going to first go into a little bit about their background, their experience in the business, respectively, and then we'll have an open discussion on various topics. So thank you for your time, and hope this is beneficial to you. Michael?
Thank you, David. As David indicated, I'm Michael Clay. My background has been in public service for the past 38 and a half years for the state of New York. I worked for a number of public entities, New York State Office of General Services, the Dormitory Authority, State of New York, and the latter position, I was the Senior Director of the MWBE program, as well as leader of procurement for DASNY. DASNY is a public entity statewide in the state of New York, doing development on public projects across the state of New York in the education, healthcare, and private sectors. They're also at usually 1, 2, or 3 in the bond market for institutional bonds in the country. So I had a long and varied career there. David?
Thanks, Michael. I'm David Melick. Like Michael, been in business just about 40 years now. Spent the first 10 years almost in the field, in the loss control arena, learning the construction business, learning how it interfaces with both the insurance companies and the brokerage community. After a period in that role, I then moved into the brokerage community, having most impact in the Northeast, and then for the last 17 years had been at AIG, running the domestic construction operations, inclusive of projects and wrap-ups. David and I had met last year, and we've connected, and decided to bring my experience into something that I think is fun and engaging and new, and we're going to talk a little bit more about that today.
Yeah. So we'll start off with the first point we wanted to share with you, and I'll sort of address it to Michael, but any of us will be able to touch on it. This is not a question and answer, but more of an educational opportunity for you. And that is, the first thing is, let's talk about this new dynamic in the industry, and that is to the agencies, to the insurance brokers, and certainly the clients, right? With the, if you take a look at the New York marketplace right now, so many projects, right? And everything is over $1 billion. With the state having 30% goal on almost all of the projects, and Michael could talk about that, right? How do the project owners get there? And one of the things we're here to share with you is the value proposition that we bring to the table. So, Michael, when you look back at the last years of just DASNY alone having its projects out there, how do you help us understand how you see this value proposition to DASNY and many other agencies, and more importantly, the clients themselves?
So David, in New York State, there's a law called Executive Law Article 15A. In the construction arena, contracts in excess of $100,000 are required to have, excuse me, MWBE utilization requirements. In professional services and in purchasing, the threshold is $25,000 or more. So with that as a backdrop, the public entities, that's agencies and authorities, there's 97 of them in the state of New York, typically utilize that metrics to establish requirements for New York State certified minority and women-owned businesses. So typically what has happened is that insurance has been exempt, and I'll put that in quotations, from utilization because it didn't count toward MWBE goals, and typically a builder, construction manager, design build team would not be able to use insurance to help with that MWBE requirement. That has now changed, as David has alluded to. Embrace Partners recently was granted approval that premiums for insurance coverages placed through Embrace can count toward MBE utilization, which is absolutely huge. So when you take a builder, general contractor, CM, and they're trying to figure out how am I going to meet the MWBE requirements based on the scope of work. I've got excavation, I've got concrete, I've got all this work to do, and I may or may not have access or aware of MWBEs who can do that work. Matter of fact, not even MWBEs, I may not be aware of any contractor that can do that work. So there's been a restriction on how these firms can achieve the requirements. Through this latest breakthrough, I'll call it, with Embrace, every project, probably across the country, and I would defer to David with his expertise, to my left, insurance has been left off the table as a possible solution. That has now changed. So now a contractor who's trying to meet goals can now utilize this value proposition of Embrace Partners in placing specialty insurance, OSIP administration, and other specialty coverages without having to replace their retail broker who they have an established relationship with to then purchase specialty insurance, which they have to do anyway. They're going to go to, as David mentioned, the domestic or the international market to place these coverages. So they're already spending this money. Now they can leverage utilizing Embrace Partners to place a portion or all of that specialty coverage, get the same coverage, get all the value proposition that they need, that's inclusive of being able to get everything that is required in terms of acknowledgments, endorsements, being able to shop the market to find the best price in terms of coverage for that client. And then that client, we also provide a value proposition in the sense that David, as the CEO, signs a notarized document attesting to the transaction. So this particular solution serves a commercial useful function called CUP. That's important for the MWBE world because all of these agencies and authorities and private sector companies, they all want to make sure that whatever MWBE they may be utilizing meets the commercial useful function test so that there's no issues about pass-throughs, all that kind of thing. That's not happening here, ladies and gentlemen. This is legitimate. Empire State Development has approved the utilization of Embrace Partners premiums toward MWBE goals. So now when I'm building something in New York or upstate New York or anywhere in the state of New York, I now have an option to be able to meet those goals even when there are specialty scopes of work that restrict the normal subbing and purchasing of equipment and supplies through the existing MWBE supply chain in New York State.
So Michael, before we go to Dave, just clarifying one thing. You use or introduce the word utilization.
Mm-hmm.
Many people outside the MWBE community really don't know. Let's expand on that before we go over to David. So couple things, right? So that's a compliance issue and also an opportunity for the agencies to then validate who you use and whatnot. Now, we also tie that back into a statement you said that there are items that are excluded, and certainly insurance was once excluded up until we came into the picture. So help maybe the brokers and or the insureds understand that. The MWBE directors understand that, but I'm not sure that the retail brokers as well as the insureds or prospects understand what that really looks like. And then we'll move to David in terms of a couple of different points that you make in terms of how this works.
So David, I'll go back to Executive Law Article 15A. The agencies in administering that law require, again, in construction projects $100,000 or more, they require what's called a utilization plan to be submitted as part of the pre-award process. As a result of that, every contractor that is subject to that law has to submit a plan which denotes what MWBE subs and suppliers and non-MWBE subs and suppliers are going to be used for the administration of that contract. Remember, this is public bidding. Okay, so it's either a sealed bid situation or it's a best value selection. So as part of that, the award process, among other things, utilization questionnaires, have you done this work before? What's your financial status? All of those things are evaluated in the pre-award process. The utilization plan is submitted by the apparent low bidder. So that's what I was referring to when you talk about a plan for those who who may not be involved in this particular sector. And then from there, the agencies are reviewing that to see if there is the intent of meeting these goals. In some agencies, if on paper the low bidder doesn't meet the goals, they don't get award of the contract. I can speak to the Dormitory Authority and several other agencies because in my years of doing this, I pretty much interacted with every public entity in the state of New York. And fortunately or unfortunately, depending upon what side of the aisle you sat on, DASNY was a leader in this regard. And so there are penalties involved. So if you do not make a good faith effort to solicit and attain the MWBE contractual requirements, there is the potential for liquidated damages to be assessed to that apparent low bidder if they don't meet the goals. Now, that's not to say that the agencies or New York State is looking to penalize contractors. What they are doing, though, is saying this is a contractual responsibility. So therefore, the agencies are there to help and to assist the apparent low bidders, but it's incumbent upon those low bidders to meet the form and function of the goals based on the scope of work that is involved on the contract that they were the apparent low bidder on. And so that's the vehicle in which, or better called, the litmus test that the contractor must pass in order to get successful awarding of the project.
Got it. No, thank you. That I think the audience would appreciate that clarification. So David, you've done, again, your resume speaks for itself. You've been an underwriter at AIG and other significant insurers, overseeing a lot of complex billion-dollar projects on that side, right? And like me, as a former underwriter, I didn't know anything about this space. Now you're part of this group, and you bring your underwriting skills so the broker community can be assured that we know what we're doing. But just from a personal level, actually, I'm going to sidetrack.
Sure.
Just tell us how you feel about this area, and share with the brokerage community what you think from the perspective of, while it's not underwriting, helping them to understand, if you will, sort of a new product in the marketplace.
That's actually a good way to look at it. Running back to my field days and then that transition to the underwriting role, if your eyes wide open and you're listening, you then can pick up on the dynamics of the business environment that our current clientele have to deal with in terms of working with the owners, the states, and so forth, and watching and seeing what works and what doesn't work and how things work and where there are gaps. And so about 20 years ago, on a couple large projects in New York, I started interfacing with some of the state and city-sponsored projects where the MWBE processes were core to execution of the contract. So I developed an understanding of the process and how it worked, but also knowing, one, that the insurance was excluded, knowing that the insurance was a growing component of the cost of construction. So, and any construction and contracting related operations, like a professional services contract, the insurance was getting to be more of an issue. So, but it was a legacy thing. Insurance companies and the brokers, we'll just put them to the side. You can't make them change. So you had this ecosystem that was developing of encouraging new enterprises that come in that qualified. There was mentorship, which embraces and supports, and it was interesting watching it and engaging it and being in part of that process when I was working with the New York City School Construction Authority. So, watching this evolve, and then about 10 years ago, construction went from big to really big and huge. So, like David mentioned, these are no longer their telephone numbers plus international code. I mean, we're talking billion to 10 to $15 billion projects, which I've done a number of them. So I've seen enough to understand how the contractors work and how the systems work, and this opportunity is groundbreaking because it allows a material impact to meeting goals where the marketplace is still developing qualified enterprises in the various trades. So you'll have basic trades, which was the low-hanging fruit, but now what's happening is you're starting to get more of the higher-end technical contractors that are available, but they still don't help clear the bar relative to the 30% or whatever the total goal is. So I always knew that in the back of my mind that there was this large vig in the construction contract that related to insurance that was kind of off the ledger. But now bringing a portion or all of that in as a way to meet the goal really reorients not so much the specialty qualified contractor, but the large contractors, the large professional organizations, and the owners, because there is a higher level of performance which then satisfies not only the letter, but the intent and the spirit of what it means to have goals set and to meet the goals, as opposed to having to ask for waivers and so forth. So, David has developed, with approval from the state now, the ability to change the mindset. It's a paradigm shift where the large contractors, the largest contractors who are used to just kind of meeting the goals in the administrative processes and calling their same typical 5, contractors, now they have another tool in their toolkit that they can then do a better job at meeting goals. And one thing that really, really matters is a contractor that normally does X wants to do something like Y. They have partners who are qualified who do X. But if they want to do Y, they can't use their X guys. They have to actually find new partners or different providers. And that's hard. So what happens is this gives these organizations who've kind of boxed themselves in, they're working on it, but now gives them a very substantial method of meeting goals in a productive way, and taps into the marketplace, the insurance marketplace, which is competitive, and that's something that's really important. It's not like you're engaging David and you're not getting a competitive product. The reality is, when you're in the marketplace with a submission, the market is competitive. So when the delegation or the direct engagement with Embrace occurs, you then have the ability to tap the market, get the credit, and get the product, the same results, great price, full terms and conditions that you would otherwise have received. So whether it's on a direct basis or on an arrangement through your existing broker, through a parceling of the premiums, that allows you then to meet the needs of the owner and the goals and the whole process that's always kind of running. As Michael would say, it's in the background, and in the insurance community, it's almost, except when the goals were actually up front and center for the broker, right? It kind of was out of sight, out of mind, right?
Right.
Or unless you're a broker contractor with either the city or the state or DASNY, where you had specific goals, you would not even, it'd be, like I said, out of sight, out of mind. So this gives you the ability to really engage and influence how your partner clients, however the contractual arrangements may be, to meet goals, and again, it's meet the intent, letter, and spirit of what we're doing.
Right. I want to go back to utilization before we go back to more specifics on where this is applicable on the various policies. So this question goes back to Mike again, or this portion goes back to Mike relative to utilization. So you have a $5 billion project, and there's about 5,000 or so registered MWBEs in the state, roughly, that are in the construction
In the
space,
construction space, yeah.
roughly, and they do X and Y. So we know, for example, that when you're taking on a project in Midtown, it's over the MTA rail system, there's complexity of that by itself. We know that many MWBEs don't have the wherewithal to deal with major foundational or the steel or the roof. And those items within the $5 billion CV for our audience, they're generally excluded. Is that correct?
They can be, yes.
They can be excluded. So there's line items within the budget that get excluded, and insurance was one of those items, right? Just for the brokerage community and the prospects could understand, because many said, well, what is a utilization plan? What are you talking about? So on a $5 billion project, there are exclusions relative to lack of available MWBEs. So then that $5 billion, then the 30% might go down against $3 billion. However, the insurance spend is still on the project value. So when you go to an underwriter, they are still pricing the project not on the exclusions, but on the total CV. And therefore, while the goals are reduced by the exclusions, relative to the insurance side, the CV value and the insurance premium remains the same. So therefore, the 30% remains on the CV value, not on the exclusions. So just want to talk about that because I've been asked about that. Well, is the number now on 3 billion versus the original? And if the insurance spend is still on the CV value, our metrics, our value proposition is still on the insurance spend.
So keep in mind, and that's an excellent point, David, keep in mind that when the goals are assigned, the project is not on the street. There's drawings and specs that are being developed by the design professionals, and then the goals are assigned because there's an estimated value that they've put together, and then it's advertised and bid. So what you're referring to, the exclusions, you know, whether it be the curtain wall or whatever it might be, is going to, contractors going to say, I couldn't find somebody who could go up 40 stories to put me a curtain wall up. They don't have the equipment, the experience, whatever else. So where this really comes to play, this solution, is that, as David has indicated, the insurance is still on the construction value. The underwriting community is still looking at that. And so the agency folk who are administering this contract and have responsibility for getting, or the state of New York getting the participation, they're still saying it's a $5 billion project.
Right.
Mr. Contractor or Miss Contractor. So from there, utilizing, notwithstanding, and I mentioned earlier in my comments about scope, specialized scope, which this would fall into, that there's an opportunity now to utilize the Embrace partners and this solution to still be able to attain goals, notwithstanding the curtain wall or any other specialty areas that might limit availability of MWBEs who could fulfill the goal. So David just mentioned the tool belt. This is another tool that the contractors, the CMs, the design build teams can use to be able to attain goals and not have to request, as David mentioned, waivers, because that is frowned upon by not only the agencies, but by Empire State Development, who has the fiduciary responsibility to manage this program, to be able to do. The state of New York has the highest goals of any state in the union currently, of 30%. So, and they're at like 31 and change as a state. So, obviously, most projects have got to attain the 30%. So this becomes even more important that these entities can now utilize Embrace to help them achieve these goals without replacing their existing broker, without upsetting their current distribution model for risk management in their firms. They're in a position now to use Embrace for the specialty coverages and then be able to still continue to respond to the agencies. And more importantly, these goals are contractual. They're not, they're goals, but they're contractual. They're built into the contract that the GCCM and design build team has signed. So they agree that they're going to meet these goals to the best of their ability. This just gives them another tool to be able to do that, notwithstanding whatever the specialty requirements are in the contract, no matter where it's located in the state of New York. And I think it's groundbreaking, as David mentioned, and we all have said, because it now gives that contractor better tools.
And thank you for that. I think everyone now has a better appreciation of utilization and how it works across the state and across the country for that matter. David, in your underwriting days, this is not a risk to the underwriting community, correct? I mean, you might be aware of it as an underwriter, but there's nothing in what Embrace does or what any other certified firm does that comes into play relative to the underwriting. Just making sure everyone understands that. Is that correct?
Yeah, that's correct. The underwriting community, when they're presented with a project or a risk, like a regular renewable risk, part of the analysis is, what do they self-perform? How do they self-perform it? What are their operations? What do they do? And then it's the discussion, and there's a little bit more analysis. Who do they subcontract with?
Right.
Who do they work with? Who's their teams? Are they a very narrowed specialty contractor, or are they a general contractor that self-performs concrete, self-performs drywall, and they subcontract everything else? So this process, the entire MWBE process, is kind of like, because it's always been exempted, has been on the side as an issue. It's been brought up, it's been noted, but because it's been relegated historically for the contractor to figure out, it's their utilization plan. The insurance companies aren't part of the utilization plan. So what's happened is we've kind of been peeled out of it because we had been part of the exemption process. Unless you, as an active participant, either an underwriter or an owner, a partner in a venture, are actually dealing with the process or find it interesting just as part of the dynamic of the construction environment. So it's really neat to know now that the gross applicable placed premium, gross, not net, because and when I say net, that's referring to what might be exempted. No, if it's a $5 billion project and we place the excess, it's not netted down to account for the $3 billion. It's actually on the full 5. Why? Because the premium was placed and run through a qualified organization. And this is the thing that's interesting. People within the insurance company community don't think as a qualified entity. And this is probably one of the reasons why they were never part of it, because a big lumbering insurance company would not qualify. So it's just like, well, and that's the problem. Then the insurance brokers, or in the case of Embrace, there weren't a lot of them, and they weren't thinking that way, and they were protective to their business. So here we are, where we have a qualified entity that can now give the insurance companies and the contractors and the design build teams, whatever they may be, the ability to meet goals in a way that did not exist previously.
Yeah. And so for this segment, we talked about, this is the introduction to the concept. We talked about utilization. And as we close out this segment, and we'll go into some other things, one thing that Michael brought up is, and I touched upon, was the availability for the insurer, the developer, to meet those goals, right? So if we use the New York marketplace as a sample right now, any given day, there's over $100 billion of construction going on as we speak. We got Micron that's coming up by itself is a monster. We got stadiums, we got the tunnel, all sorts of projects, right? And they're all a couple billion plus. When you look at the availability of MWBEs that are in the trades, in the specialty trades, right? Their capacity is both geographical as well as potentially limited by what they can do, either by the bonding or surety program that they have, and their ability to be on so many jobs at any one point in time. And one thing I want to point out to the audience, relative to what we do, while we hope more and more MWBEs to participate on these projects, our bandwidth is not limited, right? Because with our organization and our reach, we're not limited by the surety bond capacity, right? We're not limited by geographical status. We don't need 1,000 employees to participate in the $200 billion construction market. So the insurance industry, by Embrace bringing on, connecting the large insurers in this, one of the advantages is the unlimited capacity that we have, because insurance is transactional versus you're on the project for that 6 years, right? We place and we move on. So just wanted the audience to sort of, and particularly the MWBE directors, when they're looking at their totality in terms of their budget, right? Where else can they get participation? So you might have the electrical contractor who's tapped out. You might have the HVAC person who's tapped out. Again, we wish them to participate more, but it's their own ceiling. And from our vantage point, sharing that we don't have a ceiling, right? We do a transaction, it takes a couple weeks, right? You're getting that new goal. And so from the MWBE directors, I think what we want to share with them is that this is not only new, but how does it help them, right, blow through their numbers? So am I right there in sharing that, or is there a different view?
You're spot on. Capacity is a huge issue, as you touched on, and I think we all have mentioned in one form or another the past several minutes. So as a director is reviewing their portfolio of work, who may work for the state or in the private sector, that is a real issue for the firms as well as for the state. So being able to utilize and embrace who does not have those same limitations. I have 5 plumbers, I have 10 electricians, So there's only so much capacity I can go because those 5 or 10 people can only work on so many projects. Embrace has the ability to work on multiple projects across multiple areas and multiple states if necessary. So that helps because now if I'm faced with a contractor who is struggling to meet a requirement, I can now say with confidence, have you utilized, as David has pointed out, and so have you, David, have you utilized and went and had a conversation with Embrace Partners about utilizing insurance as a solution, not an additional problem, but a solution. And as David mentioned a second ago, very aptly, the insurance community has kind of been insulated. The brokers, the underwriters, because it was their clients who signed the contractual requirements for these building construction projects or infrastructure projects. The broker, the insurance community now has an opportunity to provide more customer service to their clientele by saying, I can help you, client, to meet your New York State requirement in terms of the use of MWBEs, because through specialty insurance, I know there's an Embrace Partners who can help to get you some additional legitimate participation for this contract, notwithstanding availability issues, restrictive scopes of work, all of that, pricing, I can get you some participation, I can help you. And I think that's more customer service focused by the insurance industry, which by and large, that's what they do. But I think now this is even an opportunity for them to step up further, the brokers to be able to provide that additional assistance to their insureds to say, I have a solution that I think can help you.
Right. So as we close out this segment, and we'll do another segment that goes more deeper into the various policies and how they work. But David, just relative to construction, you've got your OSIP or CSIP policies, programs, and then you've got your practice policies, your project policies, and so forth, right? We share with the audience that there's premiums on every one of them.
Correct.
And so again, we'll if you could just touch on 30 seconds or more, but when we come back, we're gonna drill down into a little bit of that. So your view in from that vantage point, because some people say, well, I can only use it here, I can only use it there, but we'll drill down a little bit further in terms of what that really means.
Yeah. So just to lay a little bit of groundwork, for the next session, you have your regular insurance renewal, and that's your what's known as your practice renewal. That's what it's called. Then what happens is when you deal with certain projects that have longer term durations or extra large size, that's when you do project specific placements. And then you have a kind of and that's just for you though, that's not for everybody else. Then you have what are known as the wrap-ups, or your OSIP or your CSIP. The owner buys it, it's an OSIP. A contractor buys it, it's a contracted program. And New York State allows, under most circumstances, the ability to buy insurance for somebody else. They all have their own insurance in effect, but it's in one program that is used. And in each one of those, there is an opportunity to engage Embrace in various levels, either from the primary through your excess, all of the products that might be involved, environmental, pollution, professional, builder's risk, or portions thereof, depending upon your broker's relationship. So the idea is that the premiums are all over the place, and it does require a little bit of an accommodation on the part of an existing broker to team with and partner with Embrace, because again, it's not just a venture. That's not permitted. It needs to be premiums flowing through in order so David can sign the certification that it meets not only the intent but the letter of the law.
So, next segment, we're going to drill down more specifically in the insurance, and particularly for the MWBE directors. You'll see the various products, as David mentioned, and the various layers depending on the product. So, thank you for your time, and we'll see you in the next segment.